Most people are completely misunderstanding what's happening with Opendoor right now. They see the stock pull back, they see red candles, and they immediately assume the story is over. But what if I told you this exact phase is where most people get shaken out right before the next big move? And no, this isn't hype. This is about market psychology, positioning, and timing. Because the truth is, Opendoor in late 2025 is not behaving like a normal real estate stock. And if you blink, you might miss what's really going on. Stay with me, because by the end of this video, you'll understand why this stock is confusing almost everyone on Wall Street right now. So let's talk about Opendoor Technologies, ticker symbol OPEN, and what actually happened over the last few trading sessions. On December 26th, the stock pulled back again. Nothing dramatic, no massive crash, just another red day. And for most retail investors, red days equal fear. Social media instantly starts calling it dead. But here's the key thing most people ignore. Context matters more than the daily price. If you zoom out, Opendoor is still one of the most talked about stocks of 2025. Earlier this year, it exploded. We're talking about a stock that was up multiple hundreds of % at one point. That kind of move doesn't happen quietly. It pulls in momentum traders, long-term speculators, hedge funds, and yes, meme stock-style retail money. And whenever you get that kind of attention, volatility becomes part of the game. The recent pullback has a few clear reasons. First, the broader market has been shaky, especially anything tied to interest rates. Real estate stocks are extremely sensitive to rate expectations, and anytime there's uncertainty around housing affordability, these names feel it immediately. Second, after such a massive run earlier in the year, profit-taking is not only normal, it's expected. People who bought early are locking in gains. That doesn't mean the company is failing. It means money is rotating. Now, here's where things get interesting. Even with the recent weakness, Opendoor is still far above where it started the year. That tells us something very important. This isn't a collapse. It's a digestion phase. Markets don't move straight up forever. They move in cycles. Expansion, pullback, consolidation, and then the next decision point. Another factor pushing the stock around right now is expectations versus reality. Opendoor has been talking a lot about technology, AI, automation, and making the home buying and selling process more efficient. Some investors love that story. Others are skeptical. They're asking a fair question. Can technology really fix the structural challenges of real estate, especially in a high-rate environment? But here's what many people miss. Opendoor isn't trying to time the housing market. They're trying to control the process. That's a huge difference. The company operates across tens of thousands of zip codes, uses data to price homes instantly, and removes friction from transactions that used to take months. Whether the housing market is hot or cold, transactions still happen. The question is, who captures them more efficiently? Another reason the stock is acting the way it is comes down to positioning. When a stock becomes a crowd favorite, it also becomes crowded. Too many people on one side of the trade means even small pieces of negative news can trigger exaggerated reactions. That's exactly what we're seeing now. Weak days feel bigger than they actually are because expectations were stretched. Let's also talk about sentiment. Earlier this year, sentiment around Opendoor was euphoric. Every green candle reinforced the belief that this was a straight-line move higher. That's never how markets work. Now sentiment has flipped too far in the other direction. Suddenly, people are acting like nothing good can happen. That emotional swing is often where opportunity starts to form. From a business perspective, Opendoor still generates significant revenue. They still have liquidity. They still have a platform that no traditional real estate company has been able to replicate at scale. The leadership team has been making adjustments, tightening operations, and focusing on efficiency instead of growth at any cost. That's not sexy, but it's necessary. At the same time, the risks are real. This is not a safe, slow-moving blue-chip stock. Opendoor is volatile by nature. The business model requires capital, inventory management, and precise pricing. Mistakes can be expensive. That's why this stock moves the way it does. High risk, high reward. So what does all this mean if you're watching from the sidelines? It means you shouldn't be looking at Opendoor through a one-day or one-week lens. This stock is telling a longer story. A story about whether technology can truly disrupt one of the largest and most inefficient markets in America. A story about whether investors are willing to be patient through volatility for the possibility of long-term change. For traders, this environment is about discipline. Emotional trades get punished. For long-term investors, this is about conviction and research. You either believe in the model or you don't. And if you don't, no price will ever feel safe enough. The biggest mistake people make is reacting instead of thinking. Red days feel scary. Green days feel exciting. But markets don't reward feelings. They reward preparation. Right now, Opendoor is in a phase where weak hands are leaving and stronger hands are deciding whether the risk is worth it. As we move toward 2026, interest rates, housing data, and execution will matter more than hype. The meme-style momentum may fade, but what replaces it could be more important. Either Opendoor proves it can operate efficiently at scale, or it doesn't, and the stock will eventually reflect that truth. So, don't ask whether Opendoor is up or down today. Ask whether the company is building something that survives cycles. That's the real question investors should be focused on right now. If you found this breakdown helpful, make sure to like the video, subscribe for more market analysis, and let me know in the comments what you think about Opendoor's future. Are you watching it, trading it, or staying completely away? Disclaimer: this video is for educational and informational purposes only. It is not financial advice. Investing in stocks involves risk, including the potential loss of principal. Always do your own research and consult with a licensed financial advisor before making any investment decisions.